Hello, everyone. There were once rumors of doubt and confusion, but the numbers don't lie, and the most recent numbers have shed new light on the whole view. Today, we bust some myths and reveal Tesla's true worth. In this video, we'll take a closer look at Tesla's market moves, how innovation is speeding up, and why, despite the fierce price war, now might be a good time to add Tesla's stock to your portfolio. Tesla's low value is a sign of a buy in a market where prices are like bumper cars. Let's change gears and find out. Stay tuned as we charge into the electric avenue of Tesla's market dynamics right here on Tesla Stock News. But before we start, don't forget to hit that like button and subscribe to Tesla Stock News. First, let's talk about how the world was on the verge of the COVID-19 outbreak in January 2020. A fascinating conversation took place between two investors predicting the future of Tesla Incorporated. This conversation turned out to be both premature and amazingly wrong. Viewers may remember that in the third quarter of 2019, Tesla shocked the market by posting a quarterly profit of $143 million for the first time. The message was clear. Tesla had entered a period of profitability that would change the way it did in the market. At the center of Tesla's story was a company on a meteoric rise, with its stock value skyrocketing to $1,450 after two consecutive quarters of success before the split. This was the setting for a risky bet that Tesla wouldn't be able to break through the $700 barrier by the end of Q2 2020. This wasn't just a test of Tesla's market performance, it was a litmus test for the future of mobility. COVID-19 was a global event that would test the minds of countries and businesses in a way that no one saw coming. The fact that Tesla's stock price almost hit $11,000 in that quarter was a stark contrast to what market experts had predicted. This event was a sobering reminder of how unpredictable the stock market can be. Warren Buffett, who is known as the sage of investing, admitted that Tesla's path was unique when he stopped trying to compete with Elon Musk's unstoppable leadership and sold his shares in electric vehicle manufacturer Bide Company Limited. Tesla is on an amazing journey that keeps giving its owners returns that are much higher than average market gains. This, dear viewers, shows how important it is to be flexible and think outside the box when it comes to investing. Sometimes we have to question our long-held beliefs in order to seize success and take a business from its poor beginnings to a strong presence in the market. The story of Tesla's rise from zero to hero in the business world by the second quarter of the fiscal year 2023 is a great example of this. The lion part of Tesla's amazing $21.3 billion in revenue comes from its electric car business. This monumental revenue shows an incredible growth rate of 3,946 per year since 2013, which is about 395 per year on average. This shows how fast Tesla has come since its early days. It was very different from the narrative. Financial problems and relying too much on government aid put the venture on the verge of bankruptcy. A turning point came in 2008, when CEO Elon Musk revealed the company's close call with bankruptcy, highlighting the dangerous path startups often take. This rocky start shows how unstable early-stage companies can be. Ventures that show that promise alone doesn't protect a business from the risk of failing against pretty high odds. Tesla's story didn't end there. Through hard work and constant innovation, the company turned its fortunes around dramatically, reporting an operating income of over $13.7 billion by the end of 2022 and an operating margin of 16.8%, a number that not only shows profitability but also leadership in the auto industry. Now let's turn our attention to the larger EV market. In 2020, EVs made up only 2.2% of the U.S. car market. By the end of 2022, that number had more than doubled to 6.1%, and analysts predict that number will rise to 8.5% by the end of 2023. That go against the grain. What about the global scene? Lastly, think about the Tesla supercharger network, which is a web of charging stations that is always growing and makes EV users much less worried about their range. Not only does this network make Tesla's cars more appealing, it also strengthens the brand's place in the market. Tesla is carefully expanding its business opportunities by applying its technological know-how to new areas. People may find it interesting that Tesla, whose current success is largely dependent on selling electric vehicles, is expanding its horizons. The energy industry is buzzing as Tesla moves into solar energy solutions with products like solar panels and the innovative solar roof technology. With a world eager for clean energy alternatives, there is a huge market for these kinds of technologies. At the same time, Tesla is using its cutting-edge battery technology to move into the energy storage market with the Powerwall and Powerpack. These innovations aren't just goods. They're lifelines during power outages and a way to live off the grid in a way that doesn't harm the environment. Now let's talk about how much they're worth. Tesla's forward price-to-earnings ratio is currently 74.4 times its expected FY24 earnings, which may make some people raise an eyebrow at the idea that the company is undervalued. However, Tesla's past 5-year average forward PE of 119 times is a much more relevant comparison. Today's price is over 37% less than what it was worth 5 years ago. On top of that, the forward enterprise value to EBITDA ratio is just below the 5-year average, which suggests a 5% discount. It's important to keep in mind that these price changes will likely cause Tesla's earnings to drop in 2023 because of the fierce competition in the EV market. However, earnings are expected to rise again in 2024 thanks to a market correction that will allow the company to regain its margins. Tesla has always had the highest profit margins in the industry. These are expected to rise from about 11% at the end of 2023 to a strong 20% by 2032. This is based on a discounted cash flow model that takes into account what analysts from sources like Seeking Alpha say. Sales are expected to reach $480 billion by 2032, which would mean 38% growth each year. This model says that by the same year, there will be an EBIT of $96 billion. What does this mean for bankers? The projected fair value of Tesla shares today is $324, which is a big discount of almost 29% compared to the current price of $250.53, even though there may be short-term changes due to things like reactions to the upcoming earnings report. For people who are thinking about the long term, the investment case is still strong. Tesla's journey from almost going bankrupt in 2008 to becoming an EV leader is nothing short of amazing. It shows a staggering revenue growth of almost 3,946 over the last 10 years. Even though the company has only recently started making money, it's already generating a lot of free cash flow, which is a key indicator of an investment's viability. As the EV market grows, the resulting price war is shaping the future of the industry in this setting. Tesla's advanced EV software, superior battery technology, and large charging network not only strengthen its market position, but also point to a promising growth trajectory. Considering that Tesla's current stock price is 29% below its fair value and that there is a lot of competition, investors with a long-term view may find Tesla to be a compelling addition to their portfolio. That's the end of our deep dive into Tesla's current position and prospects. From its innovative move into solar and energy storage solutions to its valuation that screams opportunity, even though there is more competition and the market is more complicated, Tesla continues to manage the rough waters of the electric vehicle market with its signature mix of new ideas and long-term planning. Tesla's technological edge and efficient production models may not only help it stay on top of the market, but they could also help it grow a lot over the next few years, giving the company a fair value that is much higher than its present stock price. Tesla's investment potential looks good for people who are patient and have an eye on the long term. What do you think about Tesla's market strategy? Is the possible undervaluation a good sign for investors? Or do you think that the competition will hurt Tesla's chances? How do you weigh the risks and benefits of investing in Tesla? Let us know in the comments below. And if you thought our analysis was helpful, don't forget to hit the like button and subscribe to Tesla Stock News. Thanks for watching, and we'll see you in the next video.